Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 5th of February, 2020. Thanks for joining me on our episode number 1686. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we are bullish again. The market's in a risk on sentiment this morning. Crude oil pushing $1.30, trading at 50.91, leading the pack up 2.6%. Big pop in crude here after what has been a pretty brutal drop over the last month and a half or so. The DAX is up almost 200 points, 1.5%. The Euro Stoxx up 49 points, about 1.3%. The Nasdaq's up 104 points from settlement, up 1.1%. So you get the picture. Interestingly, gold is holding steady, up $3, trading at $1,558.50, up 0.2%. And the bonds are taking the hit today, down 26 ticks, almost a handle on the futures, down about a 0.5% on price. The 10 years down 12.5 ticks, and the Bund is down 70 ticks. The driver this morning is several news items, several reports stating that there has been, Sky News reported that there was a significant breakthrough for coronavirus vaccine made by UK scientists, to which shortly thereafter a report came out that traders cited Chinese TV reporting that a research team at Zhejiang University has found an effective drug to treat people with the new coronavirus. Was the cause for a sharp rise in stocks. The UK research team says the breakthrough is that it would not take 2 to 3 years to develop the antivirus, but it would take just 14 days. 14 days. This caused a huge spike overnight, right at the European Open. A very well placed piece of news. Right at the European Open, this comes out and the market just rips up. Currently, the S&P is trading at 33.2650 as point of reference. It closed yesterday around 32.99. What was the exact price? 32.99.50, just under the century mark. So that's where we stand this morning. Really, a lot of risk on sentiment today, and that's that. In terms of what's on deck and is scheduled, there are several releases this morning from the Eurozone. We got retail sales and so on. I'll let you look at that. ECB's President Lagarde gave a speech at 7:15 Eastern. And then ADP came out, which we saw a reaction in the S&P on, a little flutter and a push up. ADP came in really strong. ADP is a payroll processing company. I think it's the largest payroll processing company here in the U.S. And it's a bit of a lot of times it's used as a bit of a forecast for non-farm payrolls, which come out this Friday, the unemployment. So 291,000 came out on ADP versus 142 expected. So the market is responding there. It's not directly correlated. It's missed quite a bit or quite often. But the market's really some participants responding in anticipation of a better non-farm payrolls report. The balance of trade came in slightly worse at a deficit of 48. Well, actually, it came in line. It came in at 48.9 billion versus 49 billion expected. The consensus was 48.2 billion. That's a deficit. And then 15 minutes after the open, we have market services PMI, market composite. And then at 10 o'clock Eastern, we have ISM services. You want to pay attention to that. and in crude inventories expected later today and this evening. We're looking for a balanced trade out of Australia. That's what's scheduled. Let's take a look at what we expected versus what we got. So the key expectations yesterday, the primary scenario was for an open auction that impulses up, takes out the overnight high, which at the time was 89.75, for a push, and I wrote it in green there, to 33.03 is the key target. That's a high probability long. We have not reverted on gaps in this product for a while. It's rare that we do. So the expectation is that the gap zone would remain open, um, and that we would be initiative, and we're looking for a long. Yesterday, as I talked about, we're really pushing the long side and keeping any shorts to very short-term scalps, very short targets. The secondary scenario is a drift up that gets sold back to the open, tests lower but holds steady. Hold steady for a rest day on the push higher. Still looking for the weekly high to be taken out. That's 92.75. This creates a reversal for the down move and squeezes shorts, most likely. Scenario 3 is what actually worked out. Scenario 3 is a quick push down and an impulse up immediately. That classifies the open as an open test drive. We do not want to fade an open test drive. We do not want to trade against an open test drive. In other words, and the target there is 33.06, as I discussed yesterday. Here's what actually happened. Let me pull it up on the trigger chart. Here's the day. So we get what looks like an open auction here, which is somewhat scenario 1, but we start to immediately push. It gives us this first, the first area to be concerned about is that 32.97, 94, 32.92.75, which is 93.94 area. It pushes to 94.75, rotates back to the mid after an impulse, gives us our first setup, and then we squeeze higher and through that 32, the weekly high. Again, it becomes support right in here, sets up another move into 3300, and then from there we push into 3303 and hold steady. We consolidate quite a bit in the near the century figure. This is expected, and we ultimately push to 3305 quarter. Remember, scenario 3 was looking for '06. This had an open drive. It did not have an open test drive. I found the open a little bit tricky to read at first, but once the impulse came in with the pullback, it became a little easier to see that there was just very little opportunity for the sellers to come in and fill the gap. So only longs would be considered. So really, it was a scenario 2, not scenario 1, not scenario 3. Must be confusing days with the open test drive type behavior. But this was an open auction that broke higher. The opening swing was 32.89 quarter down to 80 to 83 and a quarter, 83 even actually. So this held above the opening swing, above the mid, above VWAP through most of the day. And then we just chopped around from below and above in this 3,300 area as expected. It's a major strike price. And then we ended up finishing just below the 3,300 level. This looked to me, this was a normal variation day. The market was actively seeking value, as you can see here, trading across many prices. Even the market profile shows a normal variation day. Here it is. Normal variation day with a shelf here with a big ledge at 3304. A bunch of tests there, and that area now I shifted my stock zone from 3303 to 3304-ish in anticipation of this particular set of TPOs to act as support at some point in the future. We've pushed through one single, we've pushed through a second single, and we are trading way up here at in the 33.25. So one single print from the selling day, second single print from the selling day, third single print, and we are resting right here in this high volume area. The next balance zone built from the 17th through the 23rd of January. This is where we're resting right now. So you can see it in the market profile. It's also shown in the volume profile. Shorts trapped and really paying out the nose yesterday. Here's what the heat map looks like, the order flow looks like. This is again CT Bookmap. You can find it at ctbookmap.pro. Look at that climb. Really overnight, the Asian session just sat sideways mostly, building this nice little balance down here. It looked like business as usual. It had come off a little bit from the close, and then at 2 a.m. we get this strong spike, really strong impulsive move, pushing right through liquidity here. A lot of size went off in that area. You can see that the volume delta just spiking up. This volume delta, of course, is not as accurate as the one on IRT using IQ feed, but we got an indication here that there's some serious buying that came through, and then the market basically found equilibrium up in the 30, the 30, the 33.18 to about 33.30 area, right in here. You can see a lot of volume kind of traded in this region, and we've been holding sideways. So we have a P-shaped overnight profile. The overnight point of control shifting to 33 and a quarter, 33.25. Oh my God, if I can get my numbers right, 33.25 with a lot of action in the overnight session. So let's shift this forward and then crunch it down. You can see there's a lot of activity throughout the session, a lot of specs. It looks like dust. This is liquidity coming in and out throughout the session. Normally these areas are quite dark. We have a little bit of a bid down below, not much. A little bit of a bid at 33.10. 33.10, if you recall, is that big collision area on the way up. This is where a lot of people interacted, which means there are maybe shorts there. There are likely to be sellers there, and this area is being bid. I expect this to see a bounce the first time we come down here, if we come down here. And then above us, 33.35, and then from there on out, we have all-time highs at 33.37.50. So all-time highs are right here just below the measured move. When the market made all-time highs, it actually stopped just a tick short of my measured move target. That measured move target remains up here, and there's some liquidity above. I expect that given the overnight session, let's look at that for a minute. Given the overnight session and the just tremendous volume that went off during the overnight session, 584,000 contracts. Given that the overnight session is as heavy as it is, and given the condition or the shape of the profile here, I expect that we are likely to chop around in this area a bit, and the buyers are going to want to hold the 33.10 through 13 area. This area here likely to be a battleground. And remember, 33.10 has a little bit of liquidity in it. Nothing really big. So given where we are opening, we're opening really in balance. Once the news came in, the market is bullish. I do favor the long side. I'm looking for areas to get long for structured setups, shorts or scalps yet again. Let's move on to what we're expecting for today. Tut, tut, tut. So for today, the primary expectation, we're opening right on top of the overnight point of control. As I said, I'm looking for an open auction that attempts lower, consolidates, and I'm looking for a pushback to the open and a squeeze of the overnight high to complete that stat. And then I'm looking for it to attack that 3250 high, consolidate for a little bit, and go for all-time highs. We do have some key projected areas above. Of course, the all-time high is 3750. Looking for that to be taken out, and then from there, we're looking for another 10 points higher, 4775. That gives us quite a huge range. I doubt that it'll get there, but I don't know. In either case, I expect the overnight high to be taken with a higher probability than a responsive selling scheme coming in today. The news is good. Unless it's refuted, I expect the market to squeeze higher. Secondary is the opposite. Open, squeeze into the overnight high, spike through this 3250 and push down, put in a new all-time high, whatever that is, 39.40, something like that. And then a responsive sellers come in, back to the open, squeeze down to the gap mid, consolidate and hold steady for another gap day. So in this situation, I would expect us to hold some sort of a gap down here. Those are the two main ideas. Of course, scenario 3 and 4 are in play. We are in a gap. This is gap rules apply here, which means that the market's out of balance. So we expect some sort of an open drive, open test drive, and so on. Okay, so we don't need to be right. The market doesn't need to do what we want to do, but we know that if we catch along, we're aiming for the overnight high stat at 31 quarter above there, 32 half above there, 37.50. We need to hold for 37.50 in my opinion. If we catch along, and it may push as far as 47.75, the next key measured move, projected area above, new all-time high territory. Okay. That's the goal. Good luck today. I'll catch you tomorrow. And just watch your risk. Don't get involved emotionally. Wait for the market to come to you. Okay. Good luck.